In the times of expensive oil, the demand for alternative energy is growing. The company I'm going to talk about today is Gevo. This company patented bio-based isobutanol. It represents a sustainable alternative to crude oil-based hydrocarbons. It's fermented from plants and can work as a clean building block for gasoline, jet fuel, plastics and other chemicals. This technology is already proven to work. Recently, Delta Airlines signed sustainable fuel agreement with Gevo. Gevo will be supplying 75 million gallons of sustainable aviation fuel a year for 7 years to Delta. However, the company's current annual capacity at only 100,000 gallons. Gevo said that deal will generate approximately $2.8 billion of revenue over the 7 years for the company. In 2021, the company had less than $1 million of revenue. And the company has always been unprofitable, so this deal can improve the company's financial condition. And this also means that if Delta Airlines has some problems, it can affect Gevo as well. Remember that airline companies are one of the most problematic sectors with highest debts. Gevo also makes deals with other companies. Since 2020, Gevo has announced deals with Daniels Midland, Chevron, Total Energies, and Swiss-based commodities trading company Trafigura Group, signing offtake agreements for future supplies. Gevo maintains a target of reaching 1 billion gallons in production capacity by 2030 or sooner. The main task for the company now is to increase production capacity, and the company now has money for this. A year ago, when there was hype in the alternative energy sector after the elections, the company's shares soared several times, and the company took advantage of this and announced a large direct offering of common stock. In the stock history, the number of shares outstanding was increasing in geometric progression, so the company has enough money right now. The current company's market capitalization is $895 million. This is relatively expensive, although this boosts confidence that everything will be fine with the company. If the company's market capitalization was 10 times lower, for example, then new public offerings would not be effective. And this company has small debts, so basically the company's financial health is totally fine. Also remember that the government will be supporting this sector, so there is enough optimism here. The addressable market is large and renewable fuels will be in high demand. And the question is how successfully the company will be able to increase production. Right now the effort is to expand production with a new facility that is expected to have a capacity of 46 million gallons of renewable fuels per year. The facility is expected to start up in 2024. Despite having a good financial health, the company is in the high-risk category. It's unprofitable and doesn't have a large-scale production. The plan for ramping up production could be pushed back, or the company fails to execute it effectively. If this happens, the reaction will be very negative. Gevo's future success will depend a lot on whether the company can meet all the deadlines in constructing the new projects. Considering all these risks, I'd say the company is expensive. There are many companies like this, and a fairly small percentage of them shoots out. The shares of the rest may decline to a value close to zero, and in the future the company may completely leave the market. People often ask about such companies. What do you think about the prospects of a particular company? Usually there is no definite answer. This is such a risky sector. Maybe it would be better to buy an ETF for alternative energy instead of buying shares of particular companies with blurry future.